He's the CEO of Schwartz Investment Counsel, portfolio manager of the Ave Maria Mutual Funds, and author of the book, In God We Trust, Morally Responsible Investing. I sat down with him recently here in Washington to talk about the year-end financial markets, which are going through the roof, and how folks can get the most out of their investments by investing wisely and ethically. Here's my interview with George Schwartz. George, I want to start with some things we've been seeing and reading in the news about the general health of the economy and the direction of things. The Fed has already dropped rates, interest rates, twice. They're threatening to do so again, or promising to. What does this tell us about the stability of this economy?
Well, the big mistake the Fed made, Raymond, was in December last year when they raised rates and also cut back on their bond buying program. The fact that they raised rates and reduced the other accommodation, so-called monetary accommodation, really whacked the economy. They quickly got chastised for that by Wall Street, the banks, and a guy named Trump.
Yeah.
and they've changed course. And praise God they changed course, because they're lowering interest rates now. They will do so again, presumably on October 30th, and then again in December. And that should help. That should help turn the economy around. Plus, they're buying short maturity instruments again, which has the effect of pushing short-term interest rates lower.
What is the overall health of this economy as you look at it from an investor's point of view?
I think it's still very strong. It's slower than it was 12 months ago, but 12 months ago things were really on fire. And when I say it's slower, it doesn't mean that we're going into a recession. That means the rate of growth is slowing. But corporate profits remain quite strong. After being up 20% last year, they're going to be up another 5% this year and probably 10% next year. So it's a sound economy with, interest rates very low. There's no inflation. The unemployment rate is practically non-existent.
Yeah.
And especially among minorities, historically low.
Compare that to the rest of the world. I know you, as you're balancing your portfolio of your various funds at Schwartz Investing and the Ave Maria funds, you are always looking to international markets as well. What's happening with China? Do you invest in China?
No, we don't.
Really?
We have an overseas fund, the Ave Maria World Equity Fund, but no, there's no money in China, and it's in developed markets, not emerging markets, but developed markets, largely in Europe and South America. But that's a small portion of our practice. But we do keep track of the international markets. And
how is the trade war with China and the battle over tariffs affecting the health of that economy? It looks like their growth is bottoming out.
Yeah, their growth rate is down to now 6% in China after being 12% for many years. And those numbers are always subject to question. You don't know whether you can believe what the Chinese are cranking out when they talk about their economic growth or rate of growth and unemployment and the rest of it. But the China tariffs are bad. It's a mess. I don't like them. I wish they didn't exist. I don't think there's going to be a great deal of progress made on those, with the exception of the intellectual property, IP. If that got solved, that would be huge. If they got the international intellectual property problem solved, that would be a big, big plus. And the rest of Europe is stagnating thanks to their socialist policies that they've implemented for a long time. But there's great companies over there that we do invest in that don't violate our moral screens.
Well, the focus of your work is morally responsible investing. What would you advise the mom and dad sitting at home and they're saying, look, I've got a little nest egg I've been saving. Things are going great. I've got a little extra cash in my pocket because of tax cuts and the health of the economy. Where should they look? And what types of companies / stocks should they be looking at, or mutual funds?
Well, they should look at very high-quality companies, particularly now. There will be another recession. I don't think it's on the near-term horizon. But when that comes, the lower-quality stocks, probably small-cap companies, will get hurt the most. But even they'll come back eventually. But high quality is particularly important. And a family should invest in a conservative way and balance their investments between stocks and bonds. And I've been preaching for many years that a good mix is 70% stocks and 30% bonds. If someone is getting older, you know, they're in their 80s or something, a lower level of commitment to stocks is appropriate.
And move it into bonds?
Yes, which are safer.
Really? Even now when you have these low interest rates?
Well, in the case of our Ave Maria bond fund,
Right.
it has nothing but very high quality short maturity bonds, and that's important. Those short maturity bonds, again, AAA rated, AA rated, will not deteriorate in price if interest rates were to rise. Long maturity bonds is a different story. If you buy a 30-year bond and interest rates rise, the price gets whacked big time.
So you buy those short instruments?
Yes.
Now, what would your advice be to an investor? Because I know a lot of people, they want to buy into these S&P 500 funds, or they want to buy a general index fund or an Ave Maria Mutual Fund. But they stand back and say, wait a minute, I'm going to get this much of an income. Then you've got to take away the percentage, which is the fee that comes attached to that mutual fund. And then by the time taxes come around for capital gains, whatever I've gained is gone.
Well, that can be, but it depends on the fund. Like our Ave Maria Growth Fund is up 27% this year, and that's not going to happen every year. But if you don't sell it, you don't pay taxes except on the realized gains, which are passed out at the end of the year. But quality is crucially important, high quality. And our funds, of course, are all pro-life. We don't invest in companies that...
Yeah, tell me about that screening process. You have a board. You had our old friend Bowie Kuhn on the board. You now have Lou Holtz, and I know you've added members of your board recently. Tell me, how does that board, how do you evaluate funds based on what they're doing and what's out there?
Well, the board's made up, as you said, of prominent people.
Exactly what are the qualifications of all these people to be on an investing board?
Yeah, they don't make the investment decisions, of course. These people set the criteria for what we should not invest in.
Aha.
They set the big one, the main one is abortion. Don't invest in companies that support abortion. That's many of the drug companies that make abortifacient drugs and insurance companies that pay for abortions and so forth. But that's the big one. Beyond that, they ask us not to invest in companies engaged in embryonic stem cell research, closely linked to abortion.
So you keep moving the bar depending on what's happening out there, and the board helps you regulate what's acceptable and what's not in the fund.
Well, they're pretty strict on what we can't invest in. That's abortion, Planned Parenthood, embryonic stem cell research, and pornography. Other than that, we can invest in anything we want. We as analysts and portfolio managers, research specialists, that's our big strength, research.
Okay. Give me a sense of Bitcoin. We hear a lot about these Bitcoins, these cryptocurrencies. You're not a fan of them.
Not a bit.
Why not?
I think it's crazy. I think it's going to zero. I really do. And it's not an investment. It's a gamble. It's a speculation. And it's a dot on a screen. It's not
Well, this
real.
really speaks to what you were saying a minute ago about look for companies that have real value and that are solid. When you're dealing with something like cryptocurrency, you may as well be investing in this old used water bottle and saying it's going to be worth $10 million next week, right?
Yeah.
I mean,
right.
it really is predicated on nothing but a bunch of people thinking, oh, this has value for us now.
You hate to bring up something from the 1600s, but there was a tulip mania, in Holland back then, when people thought tulips were a great investment. And they were selling their houses to buy one tulip bulb.
Oh my gosh! Didn't work out so well.
Didn't work out, no.
Well, that's why they wear those wooden clogs now. They can't afford the Johnson and Murphys. Before we move on, I want you to talk about how this election season could impact the health of the economy and investors' prospects in the days ahead. I know from friends of mine on Wall Street, they're not fans of Trump, but they are very worried about an Elizabeth Warren presidency, for instance. Why? Are you concerned about that?
Yes, yeah, very much so. She could do a lot of damage to the economy and to the American people. And some of that she could do on her own. She could, operate without Congress to do things like re-regulation that Trump has removed. She could do things that would hurt the economy and the market with antitrust things. What she can't do is hurt the economy without Congress. She can't change the tax laws, which Trump had put through with the help of Congress. She can't put in a wealth tax, for instance, which is further ridiculous on her part. You know, she wants to tax 2% or 3% of wealthy people's assets, not income.
Wow.
So
I thought it was the income.
No,
it's the
asset.
overall assets, the 50
yeah.
million and then whatever it is, 100 million threshold, an extra 1%
right.
on them.
And she could further do damage if she got the nomination and elected. She could do damage in the area of pro-life activities. You know, she could do, like, appoint judges that are pro-abortion, which would be disaster. But her and Bernie Sanders and Bernie's new best friend, OAC, and the liberal media are all pushing this socialism. And I think she's pushing the socialism as much as anybody. So anyone that has studied history or has a brain in their head knows that socialism can't work. It won't work. It's never worked. When I was on your show a year ago, I quoted the great Ronald Reagan saying that socialism can only work in two places: in heaven where they don't need it, and in hell where they already have it.
That's true. Okay, you released this book a year ago, In God We Trust, and Morally Responsible Investing. And it's really your philosophy laid out. There were some principles that you went through. Walk us through those quickly. Your first one was be conservative. Why? Particularly in boom times. Look, this is a great economy, a roaring economy. These companies are all turning out profits and paying dividends.
If you reach for yield, like in buying junk bonds, you'll almost always pay a heavy price for it. If you downgrade in quality on stocks, buying hot stocks or rumored stocks and so forth, they almost always end up painful for the investor. But if you stick with high-quality companies like we buy in the Ave Maria Mutual Funds, high-quality companies with a long history of paying dividends, with a long history of having strong management and good business plans, and stick with them, you almost always make money.
Your next principle is know the field. What does that mean?
That means don't operate outside of your area of competency. And our analysts focus on things that they understand, that they know, that they interview managements and talk to the competition and talk to the suppliers of companies. It's hard to do that for an individual, but if you can do it through a professional management organization like the Ave Maria Mutual Funds, you can get a broadly diversified portfolio and be confident that the work is being done for you to know your field, know what you're investing in.
What does it mean to be a contrarian? That seems to run against everything else you've given us so far.
Being a contrarian means buy stocks when they're low. Buy stocks of good companies when they have a problem,
They've been hit
temporary problem when the stock's down. And
because all these companies, a friend of mine who's very successful in investing, all these companies have momentary glitches, a press debacle for a bit, the company's devalued, but it doesn't change the bones of the company.
That's right. If it's a solid company with a solid
product,
good management, the stock's going to come back up. But you got to buy it when when it looks the worst.
And then I'm almost out of time. Be patient, which I'm not.
Yeah,
obviously.
No, it's a long-term proposition. It's a marathon. It's not a sprint. And if you buy high-quality companies or in good mutual funds, stick with them, and you'll be happy.
And you prefer an index, a bouquet of stocks, to blue-chip companies?
Well, we don't index. We don't index like the S&P 500 index or the NASDAQ index. But we have a diversified portfolio of anywhere from 30 to 50 stocks or 30 to 50 bonds in a bond fund. And so
it's fairly focused. I mean, it's really focused.
It's focused.
Not hundreds and hundreds of
No,
companies.
it's not. No, it's fairly focused. We do extensive research. Our staff of analysts and portfolio managers, who are all CFAs and MBAs, do a lot of homework and interview managements and, as I said, competitors, and then invest the mutual fund shareholders' money when the stock prices are low. It's buy low and sell high.
Yeah, well, from your mouth to God's ears. George Schwartz, thank you for being here.
Thank you, Raymond. Great being with you.
In God We Trust, Morally Responsible Investing by George Schwartz is available at bookstores everywhere. And you can find out more about the Ave Maria Mutual Funds at avemariafunds.com.